Hello guys, welcome back to this channel. So let me show you how I was able to catch this swing intraday strategy from around this particular point. So this is where I entered, somewhere around here. Sorry for that. With around 22 pips stop loss. This is a trade I took, and I took out at least a 1 to 6.5 trade. Very simple, no mini marking, and the trade went. I held it for some times. I think I held it for some 3 to 4 days, though the trade has already moved beyond that. So this is how the trade moved, and it was a very good trade in my case. So people ask me, how do I swing? Because they see that I write intraday swing. So I said I'll take a one and then share a video. I'll take a recent one and then share a video. So that was the trade. This was the trade, as you can see. This was the whole trade. So I exited at around 6.5 thereabout, and then now the trade, this was news, so that is why I didn't want to be in this trade on Friday to hold it for long. But generally I knew that it is still going to go higher and higher, because this is a swing option, and then swing option gives you more opportunity. So you can see so far it is at 1 to 8 thereabout. And I took it on a very big stop loss because I came in the market a little bit late. By the time I was checking it, it was a little bit late, but I still managed to take it. So even my stop loss should have been here. It would have been a nice one, but I just gave it a bigger stop loss because I knew I wanted to swing it. And then I did not break even here. I always just break even, yes, but I give the market some few dollars. Don't be greedy. So this was the trade. I took this one. This is when it hit full TP 1.65 1 to 6.5 RR trade, GBP card. So you can see this was a trade. This is where I exited, and this was exactly where I market executed exit. So in one of my prop firms, this is Alpha Capital, this is where I took it. We can punch in the exact points and then where I left with this 10K account. So I have different prop firms that I'm trying out. So I was hoping to get I was risking 50 USD, which is 0.5. To get 1 to 6, which should be 600 USD, but because of, I don't know, spreads and slippages, I don't know what's wrong with Alpha Capital sometimes, so it decided to snipe me out $20, which is okay. I'm content with that. So let's break down how this strategy came to be, because now people ask me, how do I swing the strategy? It is very easy, very easy. Everything else remain the same, even the entry. This is where the market is currently. I still believe it will go up. So because even this high has been taken, so I still believe it will go up. So unless this low is taken, then I am very sure it now start pulling back. So when this high is taken, if in case you're watching this and you are in this, if this high is taken, then exit when it pulls back. Exit, because now it will start coming down. So I just coined, everything is the same except only the first step, which is now this is the swing option or the continuation. You can continue with this, by the way. Generally swing continuation, because if you check exactly how you are swinging it, you'll realize that it's just a continuation. That if the market is selling, then you will always get it somewhere here and then continue with it. Then again you can always get this pullback and then continue. So something like this. So that's why I just call it swing continuation. Nothing serious about the name. The same to buy market. So this is the swing continuation, I always call it swing intraday trader, intraday strategy, but I just decided to coin it so that I avoid confusing people. So this is my swing intraday. For the intraday, as you can see, everything is the same except number one, market changes direction by closing twice on the 1 day time frame. So this is the opposite of this. Trending daily time frame direction close in the opposite. So we need a close in the opposite, and this we need two close in a row to validate that. Now what has happened is this. What has happened is that 4 hours was on a moving direction, and then now if it closes twice, then you are very sure that market has already changed the character and possibly even caused another break of structure. So you are only getting in at the optimum point to get the best move. Otherwise, if it closes only on a 1 day time frame twice, if it closes once, then in most occasions what has just happened is that the market has just swept the inducement, tap on fair value gap, tap on some POI like order flow, fair value gap, order block, and now we can take it this low. Most probably we target this low in 4 hours. So this is why we mark this as a daily high and daily low, and then we hope to take this low. Why? Because the market has already swept inducement, which is high probability. This is inducement or structural liquidity, and therefore we now just wait to get an entry if the market aligns in 4 hours, meaning that 4 hours is now aligned with the overall daily time frame. So this is the intraday strategy. Now for the swing, you need two closure in the upside or downward direction, or even if you just want to continue, is when you find, I'm going to show you on the daily time frame, if you see it close here downward, like let's say this example I just provided, if market has come closed on a buy on a downtrend market, closed on a buy, and then we get a trade using the intraday strategy, and then now again you see it move heavily with the 2 time frame, you can just take another continuation because it will pull back. That after 2 candles, market will always be pulling back, so it can pull back and give you trade, or if it pulls and closes in the opposite direction, then we introduce swing. But if it doesn't close in opposite direction after 2 days, then we do continuation, and then now you can still swing it thereabout. But the best is when the market is on a downtrend or on an uptrend for a long time, and then daily are on a long time trend, and then all of a sudden you see 2 candles closed in opposite direction. That means that we've had this was the IDM in 4 hours, so that is structural liquidity, and then we've gotten a change of character or internal choke for pullback or continuation. We are not sure which one is it, so this becomes a change of character. So to summarize, although that is why I came up with this strategy to make work easy, because I know some people also develop analysis paralysis like myself, when 4 hours is telling you to do this, 1 hour is telling you to do this, daily is telling you to do this. So basically we will be looking for trade somewhere here. That is where the strategy will be looking for trade, and to keep this continuation going. Now, so that is basically the concept of this trade, and in summary, that is how it is coined. So you may want to know how I came up with this strategy, is because I just happened to simplify the correct thing. So let's go to the daily time frame, and then let me show you what I was talking about now. Now, for example, if you see this market, we avoid trading ranging market because that is where the expulsion move occurs. Now you can see, for example, this was a selling market, this was pulling back, and then we get two candle closure in the opposite direction. If candle closes in the opposite direction like this, if you go to 4 hours, you will find this is 1, this is 2. You will find exactly what I'm talking about. You will find exactly what I'm talking about. So these two candles are closed. Now we get our entry on the 3rd day, and then we hope to get at least 75% of this move. 75, this would be your swing point end. Now how does this happen? So you can see this was the 3rd day, we got a trade, and then market closed in the opposite direction on a daily buying market. So that we open our second gear, which is the swing intraday strategy that needs a candle to close like this. So you look for trade on this 3rd day to keep it going. So you can even hold further if it is aligning with the swing continuation. Now when we get this, you can count another 2 candles to prove that the direction is still valid. 1, 2, and then on this 3rd day you can get another continuation part of this market. So you look for the same thing on this day, 3rd day, and then you can see it continue like that. Now this market is not your father's or your family members, so at some point it will prove you wrong, and that will be okay. So we accept and move on. And if it sounds rude, don't worry, that is just true. This market is not our father's, so at some point it will prove us wrong. So you can see this day we also need to candle close, so we introduce this part. So after introducing this part, we go to this day we are supposed to be buying. So maybe you got a trade here, and then you are getting your TP to be somewhere here or the high of this. You got stopped out or to break even or whatever. So the 3rd day, if this candle had closed bearish, that would be the beginning at the end of this pullback, so we would get in. Unfortunately, it did not close bearish. So this is the first candle close, and then we see 2 candles closure in the same direction. So if we see these 2 candles close in the same direction, we are expecting this push down. Now we get a trade here, hoping to swing it. Maybe we don't get, but if I got 1 to 6 in this day, I would have walked out. Now again, what do you see here? On this day we were supposed to be looking for on this day this candle closed buy, so this day we are supposed to be looking for buys, for sell, sorry, to get this continuation downward. We don't get that. Most probably it will not. In most occasions they don't check the list. If the day is going to not give you trade, it is not going to check the list. If you are very much patient with the, in this case we will be introducing the swing intraday. We will be introducing the intraday because now the market has already started downtrending. So we don't get it. Now what do? We look for swing option to know that this market may not pull back the way we want it, because the market is imperfect. So we look for buys this day. Maybe we don't get a trade, but it gives us option to now introduce the swing intraday, because it has closed what? It has closed bearish, and the market has already started changing. So this day we hopefully get trade that we hope to hold until this particular point. But if it gives me 1 to 6, we should be able to give you here on intraday strategy, because we take it on 30 minutes. These 2 days should be able to give you 1 to 6. You leave the market. Now this day closes bearish, so we need to buy. So we get buys here on this day. As you can see, it bought, then took the high of this. This is the TP1, so you should have gotten your 1 to 6, because this when this market closed here, this is the first part that moved. This was the open candle, and then this was the high. This high took this, so this was the rest of the day. Now it closed like this, so we start ranging like this, we leave it alone. Now what do? You wait. When the market starts ranging like this, that is unwritten rule. Avoid this market unless you are trading one pair. It's okay. If you're trading multiple pair like myself, I don't want to be forcing issues. That is now where, if you are trading one pair, that is now where you introduce the third part of this strategy, which is now the same things, but now if you're trading this kind of market, now you need something more powerful than all of this for deeper interpretation. And that is why now the third part comes in, which is the day trading strategy. This is the day trading strategy checklist. So particularly, you don't need this one. Don't be greedy. You don't need this particular point. You don't need this thing. If you are getting trades like this, you don't need this thing. If you are trading 2 to 3 pairs, this should be able to give you at least almost 10 trades in a month. So you don't need that day trading strategy part. But if you are only looking at one pair, you need the intraday and the day trading. If you are trading multiple pair, just need these two to get good risk to reward. Now the third day, we can see we get closure upward, closure second. So it means that now we are back to being bullish again. So you look for your entry at this particular day, and you can see it bombshelled upward. So we are buying. Now you can swing it for long, because now this one you've introduced the swing option. Now this day it closes bearish, so you're still swinging, you're holding your positions that you got here. So this day you are buying, so you buy like that. So at this particular point, you should be offloading this position you got here with this day. When this day closed this heavily, should have gotten your 1 to 6, 1 to 5. So if you add to this position, you should be closing this. Or if you are still greedy, you can still hold more, and it gave you. Now if you want to do continuation part of the swing, this is 1, 2. The third day you are buying again. The market is still heavy, you buy, and then it bought, then it closed. If you still wanted to hold this for long, it has closed on break even on this day, and then it closed bearish this side this day. So the following day we are supposed to be looking for buys continuation. So we don't get that, because in this one is I'm very sure it did not checklist. It did not checklist all this thing. Then the market closes bearish, meaning that now too bearish, meaning that now we need to pull back for this market. So what happens is the market opens here, and this pullback is so small that I'm very sure it's just one candle, and for that reason it did not check part of this swing, because we need to swing it to some 75% here. So we don't get that. And what do we get? A closure on the upside. So another unwritten rule here is that try and avoid candles that close and takes too high. You can see this candle closed and took 1, 2. Just avoid. Doesn't mean that trade will not take place. Just avoid, or be very strict on that day of intraday. So you be very strict, you don't get this checklist, but the following day you get this is the day you are supposed to be selling, but it closed bullish. So with this bullish, now this day you're supposed to be selling too. Now because the market is now, we are using this 1, 2. So this day we are supposed to be getting continuation, swing continuation, but it doesn't happen. So it closed bullish. So it means the next day we are supposed to be getting sells to take this low. We don't get that. We get a closure upward. This day you get a trade that you're supposed to be swinging. Maybe it doesn't give you a 1 to, because the market is imperfect. And then again now it pushes downward twice. This day you need to avoid this market, because even 4 hours has changed character. This is one closure, one takeover, second takeover, third takeover in one day. Should avoid that. Most probably it is news. Then we get another closure. This day you don't trade. We got a closure downward, confirming that now we are selling. And then what happens? You get your sells here. This should be enough to give you a 1 to 6. If you wanted to swing for long, that would be unnecessary, because basic market structure, which is not important by the way, but it is unnecessary to swing a market that is moving like this usually. Even if this could be a change of character, but this would be unnecessary to swing it all throughout. So just get a 1 to 6 and leave the market. So what happens after we sold here? This day we are expecting some sells, we don't get. Instead this day you don't trade, it closed bullish. So with the next day you're supposed to be selling, you look for sales here. Maybe you got, or you didn't get, or you are stopped break even. This day I was looking for sales, by the way, and I think I didn't get entries. So now we are on the third day where I was taking trades. So sorry if the video is too long, but this is the first time I'm recording this swing option of this strategy. The difference is only the first one, the rest is the same. So this day we've closed two on the same direction, so it means now we need to be buying this market, and we need to swing it to to these imbalances somewhere here where it can give us a 1 to 6 and we get continuation. So that is what I was seeing, and that is what should be happening ideally. So I go to 4 hours. Now 4 hours, without marking so many things, you can see the way the strategy is very simple, pure price action, no marking so many things, it's unnecessary. So the first thing we look for is if 4 hours is going to align. So market changes direction by closing twice on the 1 day time frame, checked. First 4 hour aligned and closed in overall direction, which is high probability. It closes overall direction now is buy, so we need, that's why you are seeing a range, so we need a buy close. And as you can see, this market aligned by taking the high of this day has started aligning well, and it even closed bullish, which is high probability. Now we go to second alignment in the first 1 hour of the new candle. So when this candle closes, the new candle should be able to take the high of the next candle within the same hour. So you can go to 1 hour or go to 30 minutes, but make sure that if you're 30 minutes, don't exceed 2 candles. If that does not happen, leave it alone. It is going to disturb you. Even if it's going to go, it's going to disturb you by pushing a lot up and down before going. So you don't need to be in such emotional roller coaster. You are a human being. You are not a robot. You are not an EA. So at that particular point, I'll deem it to have disobeyed my checklist, and therefore I'm not interested in the trade. In most occasions, they just go, but after disturbing you thoroughly. So you can see the high of the next candle, 4 hours starts, the first 4 hours of the next candle takes the high, which is now high probability. So from this point, if you don't want to look at so many things, you just take your trade and give it a reasonable stop loss. Even this particular point is just okay. If you give it this particular point, 21 pips, that is what I came to think about. You've given the ideal stop loss should be below this, but this can be wicked, so this would be okay, but preferably will be below this range here, and then you happen to swing it for a 1 to 6. So a 1 to 6, or even a 1 to 5, based on preferences. Now the next thing is at least 2 hours. The second alignment has already occurred in the first 1 hour. This is the 1 hour. So now we look for two candles of 30 minutes pullback manipulations. So we need the candle to pull back. So this started by pulling back, so we need another one. This is the only one pullback, so we need another one. So this is not even pullback in the first place, it is continuing. So if it continues like this, in most occasions it shall just leave you alone, and it's okay. It's okay not to get trade. So we get a push down, but at this particular point the market is starting to range a little bit. So if we can get another candle closure, so we are not seeing any closure, 2 candle closure in one direction to validate a pullback. So this particular point could be annoying. That is why you can just take a risk entry. So when we get that, and the market had already aligned for entry, But at least now we have gotten 2 candles pullback, at least 2 candles pullback for 30 minutes. So this has pulled back nicely. But now just be aware that now it is pulling out and the next candle is starting the next 4 hours. So the ideal entry was supposed to be somewhere around here, but since the market is imperfect, that is why, let me see, I waited for, so you can get your entry, by the way, when this candle closed. You can get your entry when the candle's high is taken. So ideally you should be waiting for this candle's high to be taken, and then you get an entry when it pulls back. So at least 2 candles, so we've gotten this, at least 2 candles, and then entry when high or low of the first 30 minutes full body closure is taken in your direction. So this is full body closure, so you can go to 5 minutes and get, see when this is taken, and then now when you start to pull back before the 30 minutes close, you should be able to get your entry somewhere close to that particular point. So, but I want you to take note of this. The most preferable entry should come within these 4 hours that are lined. This 4 hours is going to be aggressive because it is the candle that should be taking us into profit and removing us out of drawdown. This candle, this 4 hours should be placing us into drawdown if it wants to, but this next one should be relieving us out of drawdown because it should be the first one to move in our direction if we are right. So when 4 hours started, like I said, for every 4 hours, for every candle that closes, there will be pullback. So you could wait, but personally I knew that now, that is why I entered somewhere here and I saw this going down, so I just entered here. I came a little bit late and entered. I think I entered somewhere here, not sure. Then I gave it some 22 pips stop loss because I knew the next 4 hours candle is going to move aggressively and then it will pull back again. So if you wanted more confirmation, is to wait for the next candle to pull back. So you can see this high was taken. So if you are waiting for another pullback, as you can see, this high was taken here, and that is why it was able to sustain this movement. So you can see the way it is very now aggressive after the 2 manipulation. This is the correct manipulation. So from this particular point, if you are still practicing this, if you are now beginning to practice this thing, I recommend that you just if you are still, if it start to disturb you and like this, just take it on 1 hour and give it a very reasonable stop loss, because after all you will be swinging it for a 1 to 6. So why should you be a little bit greedy? Just give it like that, and my stop loss was somewhere 22 pips, like that, and that is how it was able to move. So this protects you a lot. This candle is the most important, the next 4 hours. So the rest was just a pullback and waiting game. So this is the next day, pulled down to mitigate yesterday's order, and then a heavy pullback. It means our entry was right at the place where the BFIs had already joined this market, and that is why you see this aggressive push up. Immediately this candle tapped this zone. So that is how I was able to work out with a 1 to 5. My 6.5 was somewhere there because my entry was somewhere there. So my entry was somewhere there. And that is how I was able to work with a 1 to 5, a 1 to 6.5, somewhere there. So you can join the Telegram and ask me any question. I'm very free. I'm at your service. I'm a very small YouTuber, just willing to help and trade with people, because this strategy works in anything. Even if you want to trade it in soybeans, we trade the market movement, and that is why it works in almost everything. So ask me any question and I'll respond. If you want me to have a Zoom with you, I'll create time and then just help for the time being.